What's going on, everybody? So we just received some more inflationary data, and this gives us even more of a likelihood of a continued Fed pause, as well as a chance for these small caps to rally. And many of you know we just received CPI yesterday. That came in under expectations, gave the market a chance to rally. And we just received another piece of inflationary data. This is PPI. So let's take a look at it. We're also going to look at some other things. If you like these videos, consider hitting the like, subscribe, ring the notification bell, and let's get into this. Now, currently, we're looking at a pretty mixed day, but where small caps are concerned, they are running pretty good today, as well as yesterday. And this is due to things like CPI and PPI trending down. This is good. This is what the Fed wants, and this is causing small caps to pop a bit. Due to all these Fed rate hikes we've seen, this has caused small caps to get absolutely demolished, and this may be their chance to shine. And PPI dropped by the largest amount since April 2020. And the data saw a drop in energy and food prices, and inflation in the pipeline is looking soft. Economists said the data bolsters the case for no more further interest rate increases from the Fed. At this point, we're getting more and more likely to see a Fed continued pause, as well as the possibility for rate cuts at some point in 2024, likely by the back half of it. And looking at PPI here, this is year over year, you'll see that we reached nearly deflationary, and then we started coming back up, similar to CPI. We saw it, get to this low point and then start rising, start kind of rebounding, which isn't what we wanted to see. However, now after that rebound, everything is cooling off. CPI came in lower, as well as PPI. And now we have a 1.3% read. At least where PPI is concerned, it is under the Fed's 2% target, but they are focusing on CPI. But when you're seeing producers paying less, typically it can translate to the consumer, meaning lower and lower CPI prints. Hopefully we see more of that. And here's CPI for those of you that didn't see that. You'll see that our September read was 3.7%, whereas October read was 3.2%. I do suspect that our next CPI print going over the month of November will come in under 3%. But what do you guys think? Remember, this is data from October, and what I've noticed throughout November so far is gas prices continuing down. I know that's anecdotal, but that's just what I've seen in my area. Groceries coming down a bit, used cars coming down a bit. Hopefully we continue to see this throughout the rest of November, and then we see a decent CPI. And we see a continued trend down. And I do think over the following months, we will get towards that 2% Fed target. And we may even see PPI come in deflationary, meaning under 0%. And you'd be surprised how much can change only in a matter of months. Consider this, back in April, in the beginning of this year, we were pulling in right around a 5% CPI, and we're nearly half of that now. I do think in the coming months, we'll get much closer to that 2% target. And I don't think the Fed necessarily has to change its stance right at 2%. We could potentially be right around 2.5, 2.3 when they start deciding, okay, let's cut by 25 basis points. Let's just start doing small cuts from here, maybe every other month. They can test the waters. Remember, they're trying to have a soft landing, meaning if CPIs are at around 2.3%, why do they need to have these extremely high rates? They can start bringing them down a bit, and even Fed rates right around 4.5% and higher, meaning a couple cuts from here would still bring the market down a bit, in my opinion. Would still put pressure on the market and still bring inflation down. They had to be aggressive here in their eyes because inflation was so aggressive. I do think it's going to be a little touch and go. You're going to have to kind of play it by ear. The Fed's going to likely lower rates in the back half of 2024, maybe earlier, but they're going to do so very slow at first, in my opinion. They're going to do it and then see how the market reacts in the following months. There is a bit of a lag, so you need to remember that. But yes, I do believe we're going to see Fed cuts in 2024, and this is going to drastically help these small caps that need to acquire debt at high interest rates or dilute shareholders. Now, I do want to bring up this article saying that small caps already priced in a recession. And I'll leave it down below for you, but I want to just focus on a few key points. And we have this analyst, Eric Green, saying, I do believe that this is the start of the fourth quarter rally for small cap stocks. It's been long overdue. Large cap stocks have massively outperformed for a long period of time, and valuations have just gotten very compressed relative to large cap companies. Fundamentals are not that bad, and the data, the economic data that's come in, the employment report, as well as the CPI, show that inflation is coming down, as well as PPI that we just received. And that's one of the ingredients that we need for small cap stocks to work here. Keep in mind, these small caps have been so demolished due to Fed rate hikes, and everyone's just been avoiding these small caps, except for people that see long-term value in some of them. Now, in this portion, he's asked about, what do you think about a recession coming? And the analyst replies with, yeah, small caps are actually priced about the average for the amount down from their peak before a recession. Meaning when there's typically a recession, these stocks fall by about as much as they have fallen. They have already priced in a recession if we're looking at what they've done in previous recessions. So small caps, if anything, are fully priced for a recession, whether it happens or not, whereas large caps have not priced that in whatsoever. So our economic view is more of a soft landing. However, we've already priced for something much worse. And valuations reflect a scenario that's much worse than what we expect. So this analyst is basically saying small caps are an extremely good valuation right now, whether or not we have a recession. Even with the recession, these small caps are valued very attractively, especially knowing where the Fed is. Now, let me know, guys, if you want me to start covering specific cryptos. It seems now is a good time to really start looking at the alts, start talking about them, and slowly adding to them. Being cautious along the way, however, because if Bitcoin does pull, these alts will pull very hard. But I do think now's a great time to really start considering some of the alts and at least doing some research on them. But I'll leave this article down below for you guys. It's the top 3 cryptos set to explode on heels of a BlackRock ETF. They mention Chainlink, they also talk about Solana, and they also mention Polygon. I do think these are relatively safe alts to start considering. I think they're playing it a bit safe here because these are such large cap altcoins. And I think there are some diamonds in the rough here, some, smaller cap altcoins to take a look at, see what they're doing for their project, see how many developers are on board, see what their total value locked is, things like that. But let me know if you guys want me to start doing specific crypto videos. Give me some recommendations. What cryptos are you guys buying? Let me know in the comments below. I also want to talk about Bitcoin. You'll notice that we saw a fall on good CPI data. However, here we are with some good PPI data in terms of Fed rate hikes at least. And you'll notice that Bitcoin popped. Bitcoin just had a huge bounce off this ascending trend line. I mentioned this in my Discord that we're either going to bounce here or we're going to see an additional fall, probably to about 33,000. And this recent drop was good because we were able to cool down on that RSI. However, now with this pop again, we're just again becoming overbought. Now, of course, we could trade sideways here for a bit, let that RSI cool off, and then see a bounce again and a breakout of our previous resistance, or we may fail this ascending trend at some point and come back to around 35,000, which is perfectly fine. But either way, Bitcoin will continue rising, and any drops from here to me are dip buy opportunities as we continue approaching the halving. I mean, just based on the halving cycles, there's no better time to buy than now, unless you're talking about back when Bitcoin was 15K, but we're never going to see that again. Now, that's just my opinion, but I think Bitcoin is a very good buy. Just be aware that it is a bit overbought, so look for a potential pullback. But I think a good way to go, just take the difficulty out of it, is dollar cost what you have every week, every other week. Whatever fits your goals, whatever fits your budget. It takes a lot of emotions out of it, just simply sticking to a schedule, dollar cost averaging. Sometimes adding a little more on more red days, sometimes adding a little less on periods that we're pumping. But thanks for watching, guys. Let me know what you think about the Fed rate hikes. Are we going to see cuts by the end of 2024 or potentially earlier, maybe early 2024 we experience the first set of cuts? You'd be surprised how much inflationary data can change in the matter of a few months. I do think we're going to get to that 2% Fed target within the next couple of CPI prints. But let me know what you guys think. How are you feeling about Bitcoin now? It is back near its previous high, and we could be looking at a breakout very soon. We could be looking at a failure and a test down to 33,000. Either way, Bitcoin is going to continue doing what it does. It's going to continue rallying up to the halving. There are going to be dips along the way, and to me, any dip from here is a clear buy. But thanks as always for watching, guys. Let me know what you think in the comments below, and I'll catch you next time.